So ladies and gentlemen, what will we touch on today? Well, we're going to talk a little bit about what is Fibonacci. I appreciate that, as always, we have a broad range of experience in the room. Some people will be very comfortable with understanding and utilizing Fibonacci. Others might be new to trading and not really understand. So we'll have a few slides to just explain what is Fibonacci and, more importantly for us, how it's found in the financial markets. I'll talk about a little bit about how we use it on MT4, but I'll leave that towards the end when we actually switch across to the platform. But I'm also going to offer you here just a very simple Fib-based trade strategy that you can take away and utilize in your own trading and have a look at sort of possible trade setups there. As always, appreciate you joining us for our session. If you're here today, then please feel free to sort of engage with us and ask questions. Myself and the other team at Admiral Markets, we love the engagement. Alternatively, if you're watching this on demand on the Admiral Markets YouTube channel or on our Facebook page, then please feel free to drop us a comment. Let us know what you think. Also, give us an idea of what kind of future topics you'd like to see in the Admiral Markets Trading Spotlight series. We really do enjoy the engagement. So for me, well, for those who don't know me, I've been trading for a good while here, sort of started trading equities, and now primarily I trade FX indices and commodities. I've traded for funds and also for high net worth clients, and for my swing and position trades, I'm primarily a trend trader, whereas I'm a mean reversion trader on the intraday basis. And Admiral Markets, ladies and gentlemen, they're a broker with over 8,000 financial instruments to trade, with offices in over 20 countries, giving us global expertise with local support. We're licensed and regulated across a broad range of environments, and we provide competitive spreads on popular trading products like Eurodollar and the DAX 30 that you can see there. And you're able to engage with the markets using the popular trading platforms MetaTrader 4 and MetaTrader 5, which are available on your phone, desktop or browser, and we'll also provide the Admiral Markets Supreme Edition plugin. If you have any questions about that, please get in touch with the account representative and they'll be very happy to guide you. So, ladies and gentlemen, let's dig in. Okay, so what is Fibonacci? Well, there's probably lots of different answers, but I'm going to start right from the beginning and actually say that a more accurate question is, who is Fibonacci? Well, for those of you who don't know, Leonardo Pisano was an Italian mathematician born in Pisa in 1170, who was nicknamed Fibonacci. And he basically went and traveled the world, and then he basically returned to Italy and documented what he'd learned from his travels. He wrote a book called the Liber Abaci, the Book of Abacus, which is also what popularized the Hindu-Arabic numerals that we utilize today in Europe. So Fibonacci is not a new idea at all in any way, shape or form, but it's invariably quite often that it's only recently, as those traders have sort of engaged with markets, that they've started to hear this elusive term of Fibonacci. So what actually happened to Fibonacci is that while studying the Great Pyramid of Giza in Egypt, Fibonacci made a startling discovery and uncovered a unique mathematical sequence of numbers that changed several theories of trigonometry, algebra, and geometry. He developed the famous Fibonacci sequence of numbers, which has become the foundation of many effective trading systems. And now these Fibonacci numbers, which are used in art, music, biology, and architecture, are also used in the financial markets to identify strong support and resistance levels. So if you think about that, that is actually, absolutely astounding that, here is a chap who, in sort of around about 1200 was able to sort of study the Great Pyramids, which, were from 2,000 to 5,000 years ago. And even within that, he was able to find sort of, a startling, unique mathematical sequence, which, was used in building of those pyramids, which we still actually see throughout all manner of our everyday lives, but it also sort of replicates itself within financial markets. When you think about that, it's absolutely, a fascinating insight into the world in which we live. So what actually is it? What does it mean? Well, the Fibonacci numbers are a sequence where the third number is the sum of the previous two numbers. Okay, that's it. Just that's its very most simplest basic form. That's it. The sequence where the third number is the sum of the previous two numbers. So, you have there, 1 and 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8, 8 plus 5 equals 13, and so on. But the real value is what lies in the fact that the ratio of any number to the next higher number is approximately 0.618, and the lower number is, the relation is 1.618. And those two numbers, okay, those two numbers become very important, all right, in understanding, financial markets, and can be utilized to identify strong support and resistance levels. So, there's on the internet these days, you'll find there's astounding amounts of information on Fibonacci. We're just giving you a very brief insight into it here, and more importantly, how we can actually utilize it as a trading tool, and how we could utilize that on MT4 and MT5 itself. But really, if you just want to understand, very quickly what Fibonacci is, it's the sequence where the third number is the sum of the previous two numbers. Once you start getting into the numbers like 8, 13, 21, 34, 55, 89, that starts to become quite important when it comes to trading, and we'll just look at that in this moment. So what we talk about are the key Fibonacci ratios, and that's what you'll hear traders talking about all the time. That kind of key Fibonacci ratio of 61.8%, also referred to as the golden ratio or the golden mean, is found by dividing one number in the series by the number that follows it. So if you divide 8 by 13 equals 0.6153, and 55 by 89 equals 0.6179. And it is, quite astounding how regular this occurs. But you can also find a couple of other particular key Fibonacci ratios. The 38.2% ratio is found by dividing one number in the series by the number that is found two places to the right. For example, 55 divided by 144 equals 0.3819. The 23.6 ratio is found by dividing one number in the series by the number that is three places to the right. For example, 8 divided by 34 equals 0.2352. And so what we see is these numbers, these key Fibonacci ratios become, we see 23.6, 38.2, and 61.8. Lots of people will talk about the 50% number in trading, okay, which is not actually specifically a Fibonacci ratio, but is included on the Fibonacci ratio tools for, we'll see on MT4, and it's still a very popular number. And that in itself is a webinar all of its own. But for what we're particularly interested in, we'll be keen to see, in particular for today's session, the 38.2 and the 60 or 61.8, or round up to 62%, as you'll see on the Fibonacci tools. But those are our key Fibonacci ratios, and they become really key to us as we understand the relationship between the sort of financial markets, Fibonacci, and also levels of support and resistance, and also, as we're about to learn, in terms of areas where they may be utilized as targets as well. So, what's the relevance to trading? Well, we just touched on a little bit there that those kind of key Fibonacci ratios become sort of relative levels that we're going to look at in a moment in terms of support and resistance. But what we know is that, Forex exchange, but also, other markets are highly trending market, and prices are visibly changing in an oscillatory pattern. And you'll find that these prices follow the Fibonacci ratios quite precisely. And so with this in mind, these Fibonacci levels act as strong indicators of resistance and support levels. And that can actually help us improve the accuracy of the entry and the exit point for every trade. And for those of us who like to have precision in our trading, well then actually Fibonacci, understanding Fibonacci ratios, understanding sort of key ratios and understanding retracements and extensions, they become very, very good ways to provide ourselves with a little bit of precision in our trading. And, one of the immense advantages of trading with Fibonacci numbers is the fact that you can define not only stop losses to exit a market, but set profit objectives as well. And that becomes very, very important, ladies and gentlemen. I think that, certainly for new traders, having an ability to sort of define where you're to form a simple trade plan that has an entry, an exit, an exit for when you're wrong and an exit for when you're right. I think that actually provides traders with a great opportunity to engage in some mechanical trading that basically allows them to sort of disentangle themselves from sort of impulsive emotional trading. What you're going to learn, as if you sort of study more of the Fibonacci ratios, is that they are the cornerstone of price structure and go hand in glove with effective chart patterns like Elliott waves, harmonic patterns, and divergences. As I said, I appreciate some traders who've joined us here today will be very happy and very comfortable in understanding things like Elliott waves, harmonic patterns, and divergences. For others, they may be the first time you've heard that, and that's okay. That's okay. Don't worry. No need to be alarmed. Today, we're just going to be looking at Fibonacci retracements and extensions. But in the future sessions, we'll look at elements, things like Elliott waves, harmonic patterns, and divergences, and we can see that comes from a bedrock of understanding Fibonacci and how it plays out in financial markets. But how do we use these ratios? How do we understand what's going on? Well, for some reason, these ratios seem to play an important role in the financial markets, just as they do in nature, and can be used to determine critical points that cause price to reverse. So actually, Fib ratios, they become self-fulfilling prophecies within the financial markets. That becomes very useful to us. That becomes useful information around which we can build ourselves a simple trade plan. Price has an uncanny way of respecting Fibonacci ratios, often quite precisely. Not always, but very often. Hence, one can use the Fib ratios to ascertain the correct technical levels from which we wish to trade. What we like to think about is, people will talk about how price action is random, whereas actually what we tend to see is that price action is never really random, because every wave leaves behind the clues for the next move. And if we're trying to understand that as a complete newbie trader, is to recognize that markets never move in a straight line, okay? They always move in a zigzag, okay? They're always moving in one wave or another, and every wave leaves behind the clues for the next move. We can thus use that previous price action to help us determine the anticipated price movement. And as traders in markets, that's actually what we're keen on. That's what we want to. That's what we want to understand. That's where we want to be in terms of having an opportunity to build a trade plan. So firstly, let's have a look at Fibonacci retracements. All right, what are they? Retracements occur when a given market is rapidly heading in a certain direction. The market retracts as traders tend to take some profits. There's always somebody somewhere taking profits on a trade. This retraction represents a good time to re-enter the market, since the levels will be very appealing before the market starts growing again. So just taking that Fibonacci retracements, okay, the general retracement occurs when a market is rapidly heading in a certain direction and some traders take some profit. That's when the price falls back in an uptrend, and that can be an opportunity for us to rejoin that particular trend. When we're using technical analysis for our view of the market, the Fibonacci retracement is calculated by taking two extreme points, usually a swing high and a swing low, on the price movement and dividing the vertical distance by the key Fibonacci ratios. Once these levels are identified, horizontal levels are drawn and used to identify possible support and resistance levels. And the direction of the prior trend is likely to continue once the price has retraced to any of these ratios. The basic use of Fibonacci retracements is to find potential levels of support resistance behind the market. If the market is moving up and making new highs, Fib retracers will draw levels below the current price. So let's dig out the old drawing tool to help us here, just to annotate that, before I give you a little bit of an idea for those of you joining us. So as I said, okay, Fibonacci retracement is calculated by taking two extreme points, usually a swing high and a swing low. In this particular case, we have swing low here, and then we had a swing high here, okay? And that is basically, there we have two swing points, a swing high and a swing low. What we're able to do is then we're actually able to use our Fibonacci tool to draw a level, a line between those two areas. And then that will actually calculate the Fib retracement levels for us. As I say every week, ladies and gentlemen, please forgive my artistry. I'm a much better trader than I am an artist, but hopefully you get the picture there. You understand what we're trying to achieve there. And there you go. As if by magic, we actually have the tools here to be able to show you how it represents on MT4. What we have here is effectively there was the swing low, there was the swing high, and once we drew our tool here between those kind of swing points, what it does is the actual Fib tool on MT4 automatically projects the levels there. In this particular case, for the 38% retracement and the 61.8 retracement, and that's what we're looking for. As always, every week I'm in an office that has light sensitive lights which always switch themselves off, so forgive me for that. And what I need is actually somebody here beside me to do a little dance and keep the lights on for me, but that would only just distract from the important stuff we're talking about. So as I said, here we are in terms of Fibonacci retracements. We're looking to find potential levels of support or resistance behind the market, all right? And if the market is moving up to making new highs, Fib retraces will draw levels below the current price, and they become very key levels for us to take an interest in terms of wanting to be prepared to sort of take a trade in line, with rejoining the existing trend. So this is a particular example here. Okay, this is the dollar yen. Okay, on the 4-hourly chart, and I probably should just make it clear that we see these Fibonacci retracements across all time frames. Okay, there is no specific one that works better than the other. You will find them from 1-minute charts up to monthly charts. Fibonacci, and in particular Fibonacci retracements, they occur across all time frames. And once you start to spend a bit of time practicing identifying where those kind of useful swing high and swing lows are, that actually starts to give us a useful place for where to draw our levels, so that it can project the kind of Fibonacci retracement levels. And as we saw there, we had here, okay, just a swing low here, swing high, just drawing the tool between the two levels. And actually what we can see is that in this particular case, price retraced quite precisely to the 38, okay, the 38.2 retracements level before price, the existing trend continued. And that's what we're just trying to identify. Once the market has made a move, we can see that the market has made a pretty strong move up here. Then we'll wait and see, price will retrace. Will it retrace? Will that retrace end at somewhere around a kind of a Fibonacci retracement area, which might provide us an opportunity to enter the trade as we expect the existing trend to re-exert itself. So that becomes a very useful tool for trend traders to find a suitable good space to sort of join an existing trend. So we've just had a look at at Fibonacci retracements, but on the flip side of that, Fibonacci can also be used for what some traders would call extensions, some traders would call expansions. Okay, it's just using either name because you'll hear them sort of used sort of quite often together. But a Fibonacci extension or a Fibonacci expansion is a great tool for establishing profit targets, and it offers a distinct advantage over the other usual Fib ratios, since it isn't as widely used by traders. You'll only find that particular Fibonacci traders are keen to understand the promise that extensions or expansions offer. So whereas rather than drawing levels behind the market, the Fib expansion tool draws them in front of the market. In other words, if the market is moving up and making new highs, the standard Fib retracement will draw levels below the current price, but the Fib expansions will draw levels above the current price. I'm just going to draw it on here. So what we saw there, okay, on that previous chart of the dollar yen was, we had a swing low, then we had a swing high, then effectively we had a retracement, okay, a Fibonacci retracement, okay. As I said, just excuse my artist skills. But then actually what we see is we're looking for an opportunity to rejoin a trend. But then once we've had that, we'll then actually Fib expansions, okay, or extensions, well, they are able to sort of project ahead. Okay, so we here have, the sort of the 0.618 extension, 1% or 1 hour extension, and then importantly the 1.61. Okay, remember these two numbers, okay, they're part of those kind of golden ratios, those golden Fibonacci ratios, and that provides us with possible targets. And on the downside, well, you know, if we're in a downtrend, we might be able to identify a swing high followed by a swing low. Then we're looking for a Fibonacci retracement before price continues down in its movement. Once again, we can see, you know, where price makes moves in terms of relation to Fibonacci golden numbers, okay, golden ratios in terms of the 0.618 extension or the 1.618 extension. That becomes rather useful to us. So thank you for joining us, Vincenzo. Vincenzo asks if this is a particular pattern. Well, there you go. Vincenzo is, as usual, he's ahead of the pack. He's clearly he's done his homework. So thank you, Vincenzo. If you'll just bear with us for a couple of slides, we'll show you what we mean in terms of when we start to turn this into a specific, simple trading strategy that you can take away for your own trading. So, as I said, those Fibonacci expansions, they determine where prices could potentially move to. And the advantage is that these levels are drawn in front of the market. And so to draw Fibonacci expansion targets, we require 3 swing points. So let's take a look at what these Fibonacci expansion targets look like. So we need 3 swing points. We need let me get my draw. We need here we go. We need a point A, a point B, a point C. We've had a swing low, followed by a swing high, followed by a C Fibonacci retracement before we can identify where our possible Fib expansions may occur. And that's what we're going to have a look at, in a little bit more depth, and also on the MT4 platform. So we measure the distance from point A to point B. However, we can't project price targets until point C has been established. It's only when point C has been formed do we have the necessary swing points. So as I've just said, point A, point B, point C. We have to wait for point C to be established. In short, we identify a trend that has started and pulled back, forming points A and B, and we wait for point C to form. And we're expecting point C to form around one of the areas of the Fibonacci retracement. So maybe somewhere between the 38 to 61.8% retracement. Once point C is formed, we can plot the Fibonacci expansion tool on point A, point B, and point C. And that gives us a great idea of where to find possible targets for our trades. And so, as we said, here is a very simple sort of trade strategy, Fibonacci-based trading strategy that you can take away that includes Fibonacci retracements and Fib expansions. And it's a simple setup for you to work with that you can take away and utilize on any particular time frame and on any particular instrument. So, first point, establish a trend move and find the swing points of A and B. Then we're going to utilize the Fib retracement tool to find the 38% pullback level. What we're going to do here in this particular case is place a buy order here to go long at the 38% retracement, for a reverse, will be a reverse for a short. We're going to place our stop loss beneath point A, and then we're going to place a target at the 1.618 Fib expansion. This becomes point D. If the trade triggers, then at the 127 Fib expansion move, we're going to move our stop to break even position. And I'm going to show that and explain that a little bit more detail. But as Vincenzo, as very often straight ahead of the pack, this is very often known as an ABCD pattern. So we're looking to always try and identify a swing high and a swing low that gives us point A and point B. We're looking forward to sort of see that, price comes back to point C, which is actually where we're looking to buy at the 38.2% retracement. Our stop loss will go beneath point A, so here would be our stop loss, and our target, here we go, and our target would be at the 1.618 expansion, Fib expansion. And as I said, these are very often called ABCD patterns. There can be little variations of it, but today I just want you to have a very simple, almost mechanical trade strategy that you can take away, you can work with and utilize in your own trading setups and ideas. So here's your task from today's session. You know, unlike the other Marcus, my colleagues Marcus and Jens, I always like to set you a bit of homework to take away, because that is the best way for you to learn, to actually go through this webinar and then take a little bit of homework and sort of work away at trying to understand how these ideas and concepts could be built into your own trading plans. So go away and look through your favorite trading instruments. Look for where there were trends formed and see were there retracements that that finished at particular fib retracement levels. And once they had finished at those particular fib retracement levels, did price continue in the existing direction to the fib expansion levels? And if so, which ones? Did they go to the 161 expansion? Did it go even further? Maybe it went to the 261, maybe it went to the 423. You can find there's lots of very different and interesting fib expansion levels. But let's just take that away, okay, from a little task from today's session. That will help you sort of learn the fastest and the best by actually being able to just go through your particular favorite trading instruments and start to try and identify were there particular ABCD patterns that showed up again and again that actually provided you with quite a simple, quite a mechanical trading strategy that you'd be able to sort of implement yourselves. So in conclusions, ladies and gentlemen, Fibonacci, that was his nickname for an Italian mathematician who identified the relationship between numbers that provided us with the fibs, the Fibonaccis, and the golden ratio. And we see this golden ratio, replicate them in every aspect of life. And by all means, you know, you can find fascinating sort of insight into Fibonacci and the golden ratio all across YouTube and across the internet, and you can read more. And once you actually realize and recognize this, you'll find this absolutely fascinating in terms of the way it replicates itself in literally every aspect of our life, from nature through to actually the man-made structures themselves, and also that includes the financial markets. And if you can understand fib retracements and fib expansions, well, as we've just shown, you can build a simple ABCD trading plan. And that can actually be quite a mechanical trading plan that allows you to know, where your entry is, where your exit is if you're wrong, and also where your exit is if the trade works out. That can actually help new traders to have quite a simple mechanical trading idea. So as always, ladies and gentlemen, you know what we're trying to help you here with Admiral Markets, and in doing so, we've established the Trading Spotlight community, and you're very welcome to join us. So here's a chance to get support after the webinars when you most need it, and it's a chance for you to discuss trading strategies, upcoming market events, signals, and more with other traders like yourselves. You'll get some updates from myself and also from my colleagues Marcus and Jens, and see how they react when their trades go their way or not, which actually happens an awful lot for professional traders as well. You'll be able to get recordings of any of the webinars that you've missed, and you can sign up for that now. You can just register with Traders Yard there, okay, at tradersyards.com. And once done so, you can join the Trading Spotlight group, tradersyard.com/group/312. And what we're offering at the moment is for 1 month only. There's no live account required for you to join Trading Spotlight. So my suggestion is that you get on board and join it. My colleague Marcus is very, very prolific on there. He's providing lots of fantastic insight and information. So please, by all means, join us there and get further insight from the Trading Spotlight community. And as always, don't forget to join us next time, where I'll have, once again, my colleague Marcus on Wednesday. He was going to be talking about how to learn scalping for beginners, including what is scalping, the pros and cons of this particular trading approach, and some strategies for beginners. And when to scalp, one of the best and one of the worst times to engage in scalping on financial markets, helping you move from being a beginner to intermediate and advanced scalper. So when is that happening? That's happening 2 p.m. London time this Wednesday, October 9th. You can check your inbox for the Weber link, or you can watch us on YouTube at the Admiral Markets /education/webinar/trading spotlight -1. Okay, you can look at that on the Admiral Markets YouTube channel. As always, there's plenty more analysis and education on admiralmarkets.com. And as always, if you have questions, if you're watching this on demand later, you can contact us by dropping us an email at hello@admiralmarkets.com. Or, as I say, join the youtube.com/admiralmarkets or on facebook.com/admiralmarketsglobal. So I hope you found that useful. As I said, I appreciate we have, as always, a bit of a broad range of people in the room joining us. And I think it's, as I said, there's an awful lot you can actually find out about Fibonacci across, not only, as I say, not only just in our own life, but in relation to the financial markets. So if you'll bear with us for a moment, I'm just going to try and switch across to the Admiral Markets MT4 platform. I'm going to just show you how you can utilize it in your own trading, and I'm also just going to show you a little trick, a little tool that will actually help make the sort of the Fibonacci tool even more useful to you. So just bear with us a moment, and we'll switch across. Excellent. So once again, ladies and gentlemen, I hope that you can all hear my voice. Hope that you can actually now see the charts that we have here. Hopefully, you can see that there. What I'm here. This is the Admiral Markets MetaTrader 4 with the Supreme Edition plugin. But for today, as I said, we're just going to be utilizing the looking at the Fibonacci tool. And as I said, I appreciate we have a wide range of people here joining us. But here we have here you can see that there is the driven draw Fibonacci retracements. Okay, you can see the tool up there. You can also find it. You can find that across the ribbon, but you'll find it's set up there, and you can draw the Fibonacci retracement tool. And here's just an example from this is an example from some of my own trading. This was earlier last month, okay, September, when the pound against the US dollar looked to sort of move beneath the major level of 120, and it had quite a strong reaction and bounced off there quite significantly and provided us with a couple of trading opportunities. And you can probably already see here that I found there was a swing point here, okay, a very nice swing point, and price retraced, of course, rather price moved in the new trend were rather strong to begin with. And if I just had my, here we go, oops, just 1 second, I had my wanted to draw on my tool here. What I was able to do is just effectively just draw in the Fibonacci tool, okay, from my swing low to my swing high. What we can see is that price moved up. Price came back down into that area between around about the 38 to 62, Fibonacci retracement, before it actually sort of continued its move up. And as you can see, it actually hit the 1.61 Fibonacci expansion, but actually continued to go on to the 261 as well. As I said, there are more of these than there are more sort of Fibonacci retracement ratios, retracement and expansion ratios that you can look at today. We just wanted to have it as a quite a simple introduction that would allow you to basically utilize the best of the MetaTrader 4 Fibonacci tool. So you can see that there, and that trade worked very, very well. Its price retraced back down here to about 120.33. We can see that there with a stop there beneath the kind of the 119.58 level and a target up towards the 21.55 level there. Okay, and that's as I said, that's quite a mechanical trade that can actually be placed. We can also see that I had also in the 127 here, the 127 Fibonacci expansion level. Remember what we were saying from the trade plan is that once price hits there, well then actually you can move your stop from where you were from your initial price to actually your entry spot. So once it's hit that 127 area, well then effectively you're in effectively a free trade. Okay, you remove the risk from the trade setup, and you can just let that trade play out. So that was it there on the pound against the US dollar, and we're gonna have a little look at a few other opportunities and examples. Let me just draw it here. But what I want to do before that, I want to just show you, as I said, a quick little tool that you can utilize on your MT4 platform here. So if you select, okay, once you draw in your Fibonacci tool, okay, if you right click on it, you'll be able to see Fibonacci properties. and what you can do here is just select that, and that means you can actually basically change the colors, you can change the width, or the sort of the depth of the breadth of the lines, depending on how clear you want to see them on your particular tools. However, here's a little tool that I find enormously helpful for myself, okay, is that what I have here is, you can see there the description, what I have is, if I can just highlight that, is, you know, what I have drawn in there, or sort of added into it there, is you can see that there's a little bit of a code there, very simple code there. So whenever you want to, whenever you place that code in there, so this is the 0% level, so I have 0 space at space $. Well, what that actually does is that when that runs, what you can see is that actually, when I draw the tool, it also tells me what the level is, but also, very importantly, what the actual level, the price level is as well. So that can be very, very useful for me to very quickly understand, okay, you know, what is my entry level? And you can see here, okay, I have it here on this level here, on the 38 there. So actually what I have there is the 38 Fibonacci retracement, FR, okay, and it also, by putting that in, it tells me that it's at 123.40 or 123. So I can very, very quickly work out my entries at 120.33, my stop level being beneath 119.58, so let's say 119.53 to make it make the sums a little bit simpler. So I know that I have, you know, 80 points of trade risk there. Okay, so very quickly I can then move on to making sure I'm managing risk and position sizing accordingly. And you'll find there's plenty of webinars there in the Admiral Markets archive there, talking about how position sizing your trades accordingly. But I find that just a really very simple tool, but actually a very enormously useful tool to help me. And I could basically, I combine that, if I just have to get rid of these drawings, I combine that with the sort of the Fib expansion on sort of the one tool. And the way I do that is so that I can actually see just in one tool that I have I can quickly draw in to identify my retracements, but also it will identify my particular expansions as well. So hopefully you can see that that helps me sort of very quickly, once I've identified the swing high and swing low, I can identify where the particular retracement level is, where I want to place my order, but then also I can set my target. I can understand what my target is in a very quick, simple manner. And if you just look at that particular trade, an example, you know, as I said, we had about 80 points of trade risk to sort of generate around about 123 points of profit. Okay, so invariably, you know, we've got a good, you know, healthy asymmetric reward to risk ratio there, about 1.5 to 1. Okay, 1.5 reward to 1 risk, 1 R, and that is actually, you know, that's a great little trade setup, a great little trade plan that is very simple, very mechanical, and can be utilized a great deal. And as I said, as part of the task, you might be able to find, you know, particular areas and places where the price actually moves even further ahead. That's a pretty simple simple tool to do that. So, you know, you by all means just have a little look at that. And I'm just going to show you one or two other to show you the sort of particular ideas and levels. So let's just have a little bit to look at. Let's have a look at. Yep, this is the dollar index here. Okay, this is just, you know, beforehand, just looking. This is the hourly chart here, and the dollar index. I wanted to show just a different way, in sense that, you know, we were able to get my drawing tool, you know, from this recent high, okay, in the dollar index, we were then able to identify a swing low. Once we'd drawn on our Fibonacci tools, what we could see is that price retraced, and, you know, our short order would have been here at 98.92 with our stop above the 99.29. It actually returned, it actually sort of turned very, very, you know, absolutely precisely on the 62% Fibonacci retracement. You know, as I said, somewhere between that range, between 38 and 62. Again, that's where we're looking for a retracement to occur. But actually what we can see is that price went down to what's here, the 127, and then actually hit our target at the 161 Fibonacci expansion. So we've got, you know, say we've got an A pattern, so we've got an A point, a B point, a C point, and a D point. We have an A, B, C, D pattern. Very, very simple. As I said, I just want to show you a few examples on different instruments, different time frames, so that you're able to just get an understanding of how, you know, how basically it works across all instruments and all particular time frames. Let's have a look at euro dollar on the daily. We can see euro dollar has been on a particularly interesting downtrend for pretty much all year, really, pretty much all year. That's where it's been. And so it's a case of what we can look at is, here is an example, another example where price, having had a bit of a strong retrace up, price started to move down. Get my drawing tool, and we were able to just, once we'd identified these kind of swing high, swing low, we were able to sort of identify that, where we were looking for. Okay, we had our A point, we had our B point. You can see hopefully there that price retraced pretty much exactly in this case to the 38, okay, the 38% retracement, the Fib retracement, before moving down to, just move my video here, but actually moving down to firstly the 127, at which point we would go to our stop would be moved to break even, and then actually hitting our 161 target. So, once again, it's just once again, a simple A, B, C, D pattern. And this recurs again and again and again, regardless of what instrument you're trading or what time frame you're trading. You just need to practice a little bit of understanding how to view it, how to see it, and then they will start to sort of become easier to identify. We've only just got a moment or two left. So here's another example. This is dollar yen 4-hour chart. Okay, I think we looked at this before. It's just identifying, we had a swing point at point A or at point B. Price retraced. We can see where price retraced here, and it pretty much stopped right on what was the 38% Fib retracement before actually moving up firstly to the 100, then to the 127, which is where our stop goes to break. Stop goes from beneath point A to basically break even, and then actually what happens is it hits our 161 Fib expansion level. Okay, so we've just gone from A to B to C to D. Okay, just as I said, that pattern happens there all the time. It's very simple, easy, quite mechanical trade for you to do. And for a last one, okay, here's one on the dollar Canadian on the weekly chart, and actually, we can see that we had a really rather sort of strong big move down here on the weekly chart, but we can see that price had rallied from that low. We had a swing point here. We actually had a bit of a swing point here. Okay, we actually had a kind of clearly a few levels before price retraced, and actually we can see that it went just beneath that sort of 62% retracement, or our entry would have been here, stops beneath the lows, but we can see that invariably it's it stopped in the area of that kind of 38 to 62% retracement before moving its way up, eventually hitting the 127, which is where your price moves to break even, your price moves to your entry point, before finally hitting point D here as our target. Now, admittedly, that is a weekly chart, so that trade, because that trade ran for a considerable amount of time. But what I'd be saying is that big hedge funds, okay, institutional traders would think nothing of running that trade there for you for quite literally for a year for them. So just wanted to show that these patterns they show up across all time frames, okay, from 1 minute up to monthly. It's just about being able to spend a bit of time practicing, working out where to find the swing points, points A and points B, and then you're able to identify point C. And once point C has showed itself, well, then you're able to utilize the Fib tool to demonstrate or project a Fib expansion target of 161, and you have a trade plan. So there you go, ladies and gentlemen. I hope you found that useful. I hope that that's given you some insight into Fibonacci and also Fibonacci retracements and expansions. And I wish you the very best of success in your trading, and I look forward to speaking to you soon. Many thanks, traders.